Hello again, everyone. This is Joe Henches with Beyond the Chart. Welcome back. This is the weekend market wrap for Sunday, Sunday, November 8th. We're going to take a look at the market action here for Friday and for the week. We're going to focus in on the New York Composite and the Russell 2000, some of the indicators on the New York Composite, check in on oil, and then check in on three stocks, Apple, Alibaba, and Facebook. They're the three most active stocks of the 40 I watch for options trading. On Friday, anyway. Okay, so just a brief advertisement. If you want to, this is an abbreviated version of what I give my insider members. So if you want a snapshot of all of the indices, all the indicators I look at, and all the ETFs and everything I check in on the weekend, become an insider member. Go to the home page and check it out, see what I've got to offer, and I think you'll find it pretty interesting. All right, let's start off with the New York Composite. It was down 35 points, and the interesting thing is a lot of this happened. It came back. It was worse during the day, as you can see down here, and it came back, a lot of it in the last hour. I really thought this was going to close for the first time since October 1st. Closed for the first time underneath the 10-day exponential moving average. The blue line is the 10-day exponential, and then I've got a 21-day simple, 55 simple, and 233 simple is my long term. Now, I use Fibonacci numbers, and then the 10 is my trigger line. Now, it hasn't closed below there yet. That's kind of the first step I'm looking for, and I want to see more than one close below, but it just hasn't done it yet. But see this pullback? See how I've got this line drawn right here? This is the trend of the last 4 weeks, okay? Now when we look at the indicators, look what the RSI is telling you. The RSI is saying, no, we're not confirming that, and now it almost looks like it's starting to break down, like it's breaking down out of this congestion a little bit. When you go into the directional movement indicators, DI plus is the blue, DI minus is the red. You can see the DI plus did not confirm the move. It's totally opposite a trend on the indicator. And the McClellan oscillator also did not confirm the last 4 weeks and is now breaking back down below zero and breaking this short-term trend line here. It looks like this may be starting to break down, although price hasn't confirmed that yet. And we've got to wait for price to tell us that that's really what it's doing. The Russell 2000, this has continued to push. We're getting some divergence on it. Now I've only got two indicators here. The directional, I don't have any volume on the Russell 2000 from my supplier or whatever, my source of data, and so here it's not confirming. But then here I'm not getting divergence on the RSI. So one out of my two is saying, divergence is showing up, but I'm not getting it on both of them. So this is, for a long time, for several weeks, this was just going sideways and not confirming the rally, which started, really back, in here. Well, actually, it started right here. But then all of a sudden here on the 28th of October, this started to push for the last 2 weeks, basically. So we'll see whether it goes much further. It really hasn't rallied. It's one of the weaker ones. Both of these are one of the weakers. I mean, the S&P 500 and the Dow have rallied back up into this territory, up into here where the overhead supply is. Let's look at the weekly chart on the New York Composite. And you can see how it looks like it came up, hit this potential resistance right in here at the lows of the weeks up in this area, and then reversed back down. Now, it wasn't a true reversal bar. We did not close below where it opened. The Russell 2000, on the other hand, a little more bullish bar this week. Now, we are getting the 21 breaking below the 55. That doesn't happen very often. We've got a slight little break back here in late 2014, but you can see that the 21 was kind of going sideways here, and right now the 21 slanted pretty strongly down. And if you look back, you can see that it just doesn't break. The 21 breaking below the 55 just doesn't happen very often. It happened in 2011. It did not happen in 2010. And before that was the 2007-2008 fiasco. So it doesn't happen very often. and now we've pulled back up to it. We'll see what kind of continuation we get out of this. All right, let's check in on oil. We looked at the indicators on the New York Composite. Look at oil. Now, this was a little bit of a bear trap, it looked like to me, coming down out of this consolidation. I really thought when it broke back up into here, that when it got past the midpoint of this congestion, that it was going to really rally and run the stops and head on out. But all of a sudden, it stopped. It did it on this one day. It broke above 15 on the 3rd, and then it just reversed back down. And when you look at a weekly chart, you really see that the last 2 weeks were kind of just exactly the opposite. I mean, we got this potential reversal candle here, and then we got this reversal right back down. Almost like it's just like this week just neutralized this move here. They're just equal and opposite type plays. So, you know, what's really going on with oil right now? I mean, when you look at the trends on the weekly chart, it's still pretty solid to the downside. So we'll see whether or not we continue to get some momentum down, or whether this was just it hasn't taken out this low yet, but it looks like it's headed that way. All right, let's take a look at, start off here with Apple. Apple has retraced this move from what's this high here on July 20th to that low on the 24th of August. It's retraced almost 78.6%, one of the deeper Fibonacci retracements that you typically see. A lot of times you look for the 50 to 61.8%, but if it's going to go deeper, you look at the 78.6, and it almost went right to it. We are seeing some divergence here on Apple. Now, I'm not getting any kind of a sell signal at this point. Volume has dropped off pretty dramatically the last week and a half. You can see the dotted line is a 50-day moving average of the volume. The RSI, yes, I'm getting divergence showing up. I'm not getting it on DI plus, and I'm getting it on the demand index. So 2 out of the 3 indicators are saying bearish divergence is showing up with this last little push that it did up here. So, you know, kind of a flag showing up on Apple. And Alibaba looked like it was really going to break down on Friday. So this, again, here's my 233-day moving average. You can see how it pulled back up into this area and now seems to be getting some resistance. Potential resistance in here might be coming in from this previous high. And what was that high? The high 85.38. Okay. You saw this trend line here that was broken. We actually have, 3 points on here. It broke up through that pretty strong on the gap. And so now this is starting to show us some divergence here. Again, I'm not getting a bearish reversal of any kind on the price action just yet, but some minor divergence showing up here on the demand index, on the RSI, and on the directional movement. So all 3 indicators are showing it. Now, granted, I think the stronger divergences show up when it's over like I like 2 to 3 week period. So this is very short term type of thing that's happening in here. So right now, again, this is one we're just kind of like watching it closely. Facebook, this has just been a bullish animal over the last couple of months, actually, ever since this whole sell-off here. And really strong move. I think that was after, I can't remember if earnings came out. I think earnings may have. I don't watch that super closely. We are getting some divergence here on the RSI, okay, on this last move. So that's a little bit of a warning for you, but I'm not sure we're getting it on all 3. No, not getting it on the demand index, although it is showing up here. Sometimes, it shows up, you'd like to think that this DI minus would continue to weaken if this was truly super strong, and it didn't continue to weaken. But on the DI plus didn't stop rising. So this is the first one I look for. This is the second one when I'm looking in there. And a lot of times I like to see the best times is when they both are confirming the move. And actually here on the demand index, this pushed to a higher high. So really I'm only seeing bearish divergence on 1 out of 3 again. So that's not enough to sit and, there's no way I would jump in here and go, oh, you've gone too high, I'm going to short you right now. That's crazy. I mean, you really have got to let it start to tell you that it's ready and wanting to go down, and we're not seeing that off of on Facebook whatsoever. Look at the volume coming in on the last couple, especially, you know, even the day before that move, pretty big volume, 43 million, well above the 50-day moving average. And then of course on that move on Thursday, a huge volume. Now, this is the potential to have some kind of little reversal point here, just because of this doji star type action. But you're going to need, you know, I'm going to see this thing come down a little bit more. Going to need to see it to get down below the 10 and it's going to have to start turning before you know, start to say, okay, well, you know, this is ready to go back down. Right now, this, you know, all the signals are looking green. Look at all the moving averages are aligned to the high side. Now, they were all aligned to the high side here too, as it made a really strong move up in here. But then you can see you got it. It started to tell you it was slowing down. It was starting to trade below the 10, and then all of a sudden you got the 10 crossing below the 21, and then that's when it was vulnerable to a breakdown. Okay. Well, none of that's happening yet here on Facebook. So, all right, that's we checked in on those three most active from Friday, and we'll see how she goes on Monday. All right, everyone, have a great weekend, and check on the link here on the video, and click on the link and head on over to the homepage, check out and become an Insider member. Have a great weekend, everyone.